Hi, I'm Aussie Dollar Man, and welcome to the Forex Form Guide, where we take a look at the major currency pairs each week through the lens of WD Gann analysis. If you're new to the channel, welcome. I like to chat about WD Gann, trading, forecasting, and the Forex markets. I've put together a playlist of videos that you might find helpful to get started with. And if you do find some value in this video, I'd really appreciate it if you could click the like button and add a comment to the video. It does help me to push the video out to more people. I'd also love it if you subscribed to the channel to stay up to date with my upcoming videos. In this episode, we'll take a look at the Aussie dollar US dollar, the pound US dollar, the euro US dollar, and of course the US dollar Japanese yen. Before we do that, a quick disclaimer: this video is for educational and informational purposes only and should not be considered as financial investment or trading advice. Bottom line there, do your own research. It's not financial advice. Trade responsibly. So we'll kick it off by looking at the Australian dollar US dollar. And I like to do that by referring to page 46 of Gann's book, The Wall Street Stock Selector, where he lines up his charts side by side. So he had a yearly, a monthly, a weekly, and a daily. Very hard to determine the trend just looking at one chart or one time frame alone. So here we see the Australian dollar. I've got the monthly up the top left and then the weekly off to the right. You can see we've been rallying from the April low. So far, just the one monthly swing. We're in that first swing. So generally speaking, with an expanding up range like this, there's a good chance that we'll have a second swing after this. As you can see though, this monthly swing initially began with a very strong weekly first range out, a little bit of a pullback, and then it's basically gone nowhere for 1, 2, 3, 4 to 5 weeks there. 65.56, which was a 5/8 retracement of this range down here, is a target area that I was watching for a potential top there. We have turned down from 65.45, about 10 points short of that. We've retraced this move here. We've retraced 1/8 of the move. It's a 45-day move. We've retraced 1/8 of it in 2 days. Not a fantastic move, but we had a rundown of 69 points, a pullback, and then another rundown a little bit larger than the first one, and then a strong rally late on Friday before giving up a bit over half of that rally before the market closed. I went short this market at this top here, or just below this top here at 65.28. We'll talk about that in a moment. My thoughts are this is probably enough for a weekly top and to have us pull down, maybe even enough for a monthly top. However, the pattern is very hard to make out because of this sideways action here. So if we do go up a little bit further, another week or two, it's not going to bother me too much. My style of trading, if you're new to the channel, is that I like to take a very, very small risk entry so that as soon as I can move my stop loss to break even, and then all the pressure is gone, and I can just sit back and let the trade unfold. In this case, I missed the top there. I was a little bit surprised by the strength of the run down. I thought we'd see a little bit more upside there. I mean, when I say strength, it's only 69 points. That's not a very big move, but it did clean out a whole bunch of lows there, and it came in on the 11th of June. I was looking around that 12th to the 13th for a turn to come in there. Now, if I'm wrong on that, I did think it would be a top, but if I'm wrong and that 12th to 13th has come in as a low, the next date I'm watching is the 20th of June. So I'll talk a bit more about that when we look at the economic calendar later. But basically, if we go up to the 20th of June, if that's the low and we run up from there, well, I'll know that I was wrong there. I missed something there. And the next date of the 20th will be the one that I'll be watching. I just want to take a moment to talk through this trade with you here because it uses a really powerful Gann tool that generally speaking, doesn't get spoken about. And it's a real shame because it's so easy to put on and interpret. It doesn't give you every turn magically, but it gives you a lot of clarity and it can give you some great trading opportunities too. So I'll talk about that in a moment. But this top here, as I said, I wasn't expecting it. For those who don't know, my wife gave birth recently. So we have a newborn and a toddler as well. So things have been a little bit busy here. I'm not sitting in front of the computer. I don't normally sit in front of the computer watching all day anyway. But I missed this move here. I woke up the next morning. Someone alerted me to it. They said, oh, I think the Aussie dollar top is in. So what do? A lot of people, when they see the market down here, they'll convince themselves the top is in, and hey, the top may not be in. They'll say, the top is in, look how far it's come down, and they'll want to jump in short there. But almost always, when you get that urge that's really strong to go short, the market has what we call a retest, and it rallies into a lower top, and you've got to sit through that, and it's not very nice. So A, I don't like doing that, but B, I like to enter somewhere either near the top or near that first lower top using the smallest possible risk entry. I typically risk 10 to 20 points on an Aussie dollar trade if I can, and you can do that by price forecasting or you can do it by dropping down to smaller swing chart timeframes. Now there's a skill set around that, sliding up and down your swing charts, say from a weekly to a daily, 4 hour, 1 hour, 15-minute, 4-minute, etc. And that's beyond the scope of these weekly updates. In this case, I used an at-market order targeting a 75% retracement here. So I'll talk about that in a moment. If you haven't seen it, a video that I recorded about a month ago, how to spot a market turn using Gann's techniques, will cover off some of the concepts that I'm about to mention here. So if you're uncertain, that might be one that you like to revisit. So looking at the Australian dollar, this is how it looked when I saw that I had potentially missed a top there. And there was enough evidence there for a trade at that top. We had a nice double top trade there that students might like to have a look at. Not being in, I left it alone. I came back 4 hours later to check what was going on. We'd gone a little bit further down, then the market had closed higher than the previous close and looked like it might be ready to make a little bit of a rally to the upside. When this happens, when I think that this first range down is over, I start thinking, where might a lower top trade come in? And a tool that often gets overlooked is the ranges resistance card that Gann talks about in How to Make Profits in Commodities, section 2. And it's this here. You simply put it on. You might know it as a Fibonacci retracement tool or a Gann retracement tool. Obviously, Gann didn't name it after himself, so he just called them a ranges resistance card. You take the range there, obviously from the high down to the low, and you divide it into 1/8 levels. 12.5%, 25, 37.5, 50%, etc. 62.5% is 5/8. I know a lot of people like to use 61.8%, the Fibonacci ratio. In my experience, that number, those Fibonacci numbers, work incredibly well in markets, but on a different level to this. On the retracements, I think it's the 1/8 that are working, and you're talking about different systems there. I won't go into that in this video. Now, in my experience on the Australian dollar, when we get a pullback, when we're looking for a lower top there, it's usually between 37.5 and 75%. So if the market gets to 75%, I know that I can take a trade and I'm either going to get stopped out once as opposed to going short here at 37, short at 50, short at 62, which I wouldn't do. I don't use this tool in isolation. But I know at 75%, I can take one trade. And if I'm stopped out, then I know that I was wrong on the trade and I can reassess from there. So very quickly, without going into detail, my approach is I have a pressure date to watch in the market, and then I look for a setup on that date. Now, my approach for targeting one of these first lower top trades, that's assuming that I didn't get the extreme top. Gann said the first lower top is actually the safest place to sell. And in my opinion, it can often be easier and give you a higher reward to risk ratio, which you'll see in a moment. But if I can see at the top that I have a pressure date, and I use Gann cycles from the tunnel through the air, which I talk about plenty on the channel. But if I can see that, and that there was a setup, and that we get an overbalance in price here, again, watch that video, How to Spot a Market Turn, if you're unfamiliar with the terminology of an overbalance in price. But it's basically just a very large range against the trend, bigger than all the previous ranges down. So it's the market telling you, hey, it's bigger than this one here, bigger than this one here, bigger than this one here. Something has changed in the market, and maybe the trend is down now. So I get an overbalance down. Then I look for this retracement up here. And then one of the pieces that I use is this ranges resistance card. There's a few price techniques that I use. I'll tell you where you can find those in a moment. But I love 75% retracements because it really is a one and done thing. I'll place an order around there. If I have other things going for it, I'll place an order around that 75% milestone. And for the Australian dollar, you'll have to do this differently on your market. You'll also have to see which milestones the market usually works to. But on the Australian dollar, I find if it goes much past 75%, it usually takes out the top there. So I will often sell around that level. I'll have other stuff going for it, but I'll sell around that level and I'll put a 10-point stop on. In this case, that kept me in the trade and the market tanked on the Friday morning there. Now, as you can see here, again, looking at Gann's approach from the Wall Street Stock Selector, this is a 4-hour chart on the left. This is a 1-hour chart on the right. There's the 4-hour move down. You can see a run down there, another run down, then a weaker run, not much down there. And then the market took out those tops there. So that's generally when you take out a few tops of the run down, or when you get a higher bottom on a smaller time frame, like the hourly chart. In this case, I find the 4-hour and the hourly work together. That normally means that's the end of the down move, which we had here. And we had a run up and then a run down, a little bit of a downswing there, a pretty weak downswing really. A failed run up here, not much to write home about there. And it just went sideways around there for about 12 hours and then bang, when the time was right, off it went. Now, that was 69 points down. The next range down was a little bit bigger, which usually means you'll get another run down. In this case, though, after that initial run down, the market was very sideways. We actually had a big spike up on Friday evening, Sydney time, early Saturday morning, before the market pulled back again and gave up a lot of those gains. But from my point of view, this is something worth studying. It's not enough to trade in isolation, okay? And sometimes the market will only retrace 37 or 50 or 62.5%. But if you think you've got a top that you've missed and you've got enough evidence for that top, and if you've got that overbalance down there, and if you get a 75% retracement and you can find a couple of other things going for it, that can be a great place. I can think of a number of trades that I've taken over the years out of that 75% retracement. At the end of the day, you will miss some trades sometimes. If you see a setup forming at, say, 50% or 62.5%, well, sure, I'd have a go at it. But in this case, we had a very strong run up here to that 75% milestone. It's only because of the top there and the overbalance that I was prepared to take a crack at that top there. Now, a 10-point risk, I'm still in the trade. I have moved the stop loss to break even. I did that here when the market collapsed down here. So stop loss is at 65.28, market closed at 64.85. Unless there's a huge gap up on Monday morning, and I hope that there isn't, that should be fine. And worst case scenario, I get a break even on the trade if I'm wrong. That's how I like to trade. I call that SMART trading. SMART is an acronym you'll see me talk about. If you check out the previous versions of the Forex Form Guide, you'll see one of them in there discusses this. You'll see it in the heading. But S stands for small risk on entry. And then M for SMART, it's an acronym. M is move stop to break even. If I can get a really small risk on entry and then quickly move the stop to break even, in this case, it took about 12 hours to do that. It was after this crash here. Then I'm in a trade. And if I'm right, it's going to run on a long way. And I'll make 20, 30, 40 to 1 on the trade. If I'm wrong, I get stopped out for a break even. No loss there. I move on to the next trade. Everybody is different as a trader. I can assure you this approach is not suitable to everyone. For me, though, I love the peace of mind that comes with having a break-even trade, sometimes as often as an hour or two after getting into it, but generally always within that first 24 hours. Now, this form of analysis, there are two places that I highly recommend that you go to in order to study this. The first is section 2 of W.D. Gann's book, How to Make Profits in Commodities. It's all there, section 2, form reading. However, for me, I struggled with that a little bit. I have to be honest, my swing trading skills and my entries and exits, taking small risks on trades, that sort of stuff, it came from a program called Safety in the Market and the Active Trader program there. I was a student there 20 years ago. I was also a teacher there for a period of time. And outside of Gann's raw work, this is one of the few programs that I actually recommend. There's so much out there on Gann. A lot of it is the same and a lot of it is rubbish. At Safety in the Market, I'm not saying that they have all the answers, but when it comes to swing trading and form reading and knowing how to read a market and get into a trade with confidence, there's nothing else that I can recommend that comes close to that. I like the team at Safety in the Market too. They've always give good support. They have a saying, once a student, always a student. So if you are looking to learn swing trading, that's something that I'd encourage you to check out. I believe they do a free demo of the program as well, if you're interested in checking that out. I don't get anything for recommending that. I don't have any affiliation there. As I said, I was both a student and a teacher there, but this is just me giving my honest opinion as to what I think is the best way for learning swing trading and form reading and price forecasting. And let me put it this way, that's the program that I'll be starting my kids on if and when they decide they'd like to learn Gann. So on the Australian dollar, before we move on, we have had a 1/8 retracement there. So it's not a bad start. It's just not a massive run down so far. I'll be a little bit more confident if we have a third day down on Monday that top might be in. It doesn't look like a traditional topping pattern. It's a little bit unclear. As I said, there's enough evidence for why we had a pullback. We've got that pullback now. We'll see what happens on Monday. If we push down, then we should run down till at least, say Wednesday night, Thursday, when there's a bunch of announcements coming out there. If we go up, then I'd be looking at those announcements on about the 19th of June for the next turn in the Aussie dollar. And then that's likely to be the weekly swing chart top and possibly the monthly swing chart top too. Before we go, just a couple more applications of the ranges resistance card. You can see here out of our April low, this is where we're at now. That's actually a monthly swing there. I've got the weekly chart on there, but you can run that over the monthly range there. And if we do go down, just as I showed you earlier, obviously 75% is key. If we break that level, I'd say we're breaking this low here. But I'm always watching 37, 50, 62.5, and then 75% using this technique. That narrows it down to 4 numbers. And often one of those 4 numbers will call the turn that I'm looking for, and I can get a really good small risk entry. And then once I've got those 4 there, there's a couple of other techniques that I use regarding ranges and simple mathematics in the market to piece together a price forecast. And you'll have a cluster of numbers all coming in around the same point, and that's where you'll look at for your next trading opportunity. At the same time on this screen, I'd also be watching a ranges card from the run down to the low there. we have done more than a 50% retracement of that rundown from the September high, and we're just sitting underneath that 62.5% milestone there. I would have liked this top more had it touched that 62.5% milestone. It just doesn't look like it's done yet to me. But yeah, as I said, I'm short. We'll see what happens on Monday. Let's move on to the British pound now. That's a similar pattern to the Australian dollar. However, on the pound, again, to me, it looks like it might have a little bit more upside in it. Here's the monthly chart on the left, and you can see it's been a very strong run up here. At some point, that monthly run is going to end and the market's going to turn down and have a pullback. But because it's an expanding up range there, there's every chance that after the pullback, it just puts in a higher bottom and then we get more upside there. But until that happens, we can't really do a lot of long trading here because, as I said, at some point, this thing is going to fall away and have that pullback. If we look across on the weekly chart here, the trend is clearly up. We've got higher tops and higher bottoms there. On the daily chart, a little bit like the Australian dollar, very, very sideways through here since the middle of May. Obviously not quite as bad as the Australian dollar sideways period, which has been sideways for about 8 years, it feels like. It's been about 6 months, but feels like about 8 years. It seems like forever it's been sideways and choppy and rough. But here on the pound, just this pattern here doesn't strike me as a final top. I don't think it's the top, and I think that there's more to come. So let's look at a few charts here. Firstly, looking at this rundown from the 2021 high on the pound to the September 2022 low, we've run up, and this is the ranges resistance card. Again, I said it's there in section 2 of how to make profits in commodities, and it's one of 3 price forecasting techniques or 3 types of technique that are taught in Safety in the Markets Active Trader program. But you can see with that card, it's giving you a lot of tops and bottoms there. You can see the higher bottom there on the 37.5%. It's sat on that. You've got the 62.5%, 50%, up to 75%. So that could have been a place to go short. The market tanked for a few weeks, sat right on the 50%, and then turned around. It's come up and broken 75%. So based on my understanding, I would suggest that this market is at least going back to that top, to double top, but almost certainly I think it's going to push through there and break through those tops and go higher. So keep that price in mind, 142.50. And if we extend the ranges card and we look at a slightly larger range up here, why have I chosen this range? Well, this was a very clear range down here, and then we've had a bit of a pullback up to here, a very weak pullback, and then that's the whole run down from that top. And you can see on the way down, we stopped at 62.5%. This ranges card I've only put on there when that 2022 low came in. So why is the market respecting it back here and over here and down here and down here and over here? Isn't it interesting? The market almost seemed to know that it had to get to that level and it was working on those percentages on the way down there. Interesting. Anyway, you can see the market, it's reacted on 25% a couple of times there, little double bottom there. And we're approaching the 50% milestone there at 137.74. That's another price you might like to write down. As I said earlier, I think we're going to break above 142.50, but it doesn't have to just get there all in one hit. So it may stop at that 137 level, have a bit of a pullback, maybe even to that 37.5%. Do the maths in your head. If we have a low here on the 25%, and it runs up to 137.74 and then runs down to 37.5, what kind of retracement is that? You might like to type it in the comments below. Anyway, looking at that 50% milestone, that 137.40, if we look at this large range up here, and then we repeat it from this low here, 100% would take us to 138.15, right up at that 50% milestone. And again, a repeat of this initial impulse move, as Gam would call it, from the low down there, and then we apply that range. So you calculate this range here, and then you run it up from this low here. 100% takes us up to 138.93. Okay. Now, one of these alone, you can't say it's going to stop the market, but when you start to see 3 or more of them at the same level, you know there's going to be some potentially strong resistance there. And when markets reach levels like that, they normally do one of 2 things. They stop and they turn around and have that pullback that we're talking about, or they burst through them with high energy and keep going up. So for me, I'd suggest it's more likely to stop at that level, but that indicates there's a little bit more upside due on the pound. On the Australian dollar, I'm thinking that we might see a little bit more downside from where we're at, but the Aussie and the pound, they'll generally speaking, most of the time, not always, but generally speaking, they'll move in the same way. So could both of these scenarios play out? Well, yeah, the Aussie might have a little bit of a pullback. Maybe the pound pulls back a little bit too, and then you've got a smaller range there, up to there, pullback, and then running up into those tops there. So around 138 on the pound, I think is going to be a good intermediate level to watch before we get a bit of a pullback. And that gives us a couple of trading opportunities. You can trade up into the potential top. If we get signals for a top there, you can trade it short. It doesn't look like much, but even just down to about here, a 50% retracement, it's going to be 600 points plus on that market. And then you potentially got a monthly higher bottom. And if we go up, and remember I said if we break through that 142 level, it could be quite a bit of upside there. Well, if you get long around the 132 level, you're already 1,000 points up. And if it kicks on, well, you think about that. You get a 20-point risk, for example, on the pound with your entry, and it runs 1,000 points in your favor. That's a 50-to-1 reward to risk ratio. Right? So it is really worth your while learning this stuff. In my experience, trading with Gann's form reading, you can't trade every single move, or you won't get every single move, no matter how good you get with the swing charts and the form reading. There are time cycles that Gann used that you do need, which he coded into his book, The Tunnel Through the Air. There are also higher level price systems, which are a lot more accurate than this stuff, and they give you a sense of certainty as to where the market's going. That's something that I'm investigating at the moment. But a couple of interesting levels there on the pound, starting with 138. If we move on to the euro, a similar scenario there, although it does look a little bit stronger than the pound did. You can see if we take this large range from the 2022 low and we apply it to our 2025 low, the market shot up very quickly to reach the 75% milestone of that run up. And then it's dropped back down and sat right on that 50% milestone before turning up again. And the 100% repeat target there of that initial first impulse move up there is 119.16. So 1.1916. Interestingly, over here, you've got a run up from the 2025 low. This is a weekly chart. So over here, that's your really big picture monthly chart. Okay, this is a monthly swing. If we look at this monthly swing as Gann did, we break it down. So that's the start of the monthly swing down there. It equates to this low here. And that's the move on the monthly swing so far. We've basically, if you ignore this little bit of sideways, we've had a run up to here, a pullback, a slightly larger run to here, pullback. If we have that same sized run again that we had in our last run up there, that would take us to 119.05. 119, 119. Then, if we look at this weekly range up here, and you can see that started here with the May low, you can see if we take that repeating range, 200% of that would take you to 119.17. So 119.16, 119.17, that's called a price cluster. So for me, that would be an area, if and when the euro got up to that level, that would be an area that would be well worth watching for a change in trend in the euro, and potentially a good trade too, because even if it just does a 50% retracement, that's 800 or 900 points there, back down to that level. You can do a lot with that, especially if you can get in with a 10-point risk there. Now, again, it might seem like I'm doing an ad for safety in the market. I'm really not. But this stuff here that I'm showing you, there's plenty more that you can be doing with this stuff. And it's all there in that active trader program. So there you go. I don't get paid for saying that. And I don't ask for any payment for saying that. My intention with these videos is just to be helpful. I hope that that's useful to you. Let's move on to the US dollar, Japanese yen. When I was doing a run through these slides, I had to pause and double check that I had remembered to update this slide, because I think it's been the same slide or very, very similar for about 6 weeks on this market. You can see over here on the monthly chart, we had a top come in and a nice run down there into, maybe a little double bottom there. A weak rally into a lower top there, which I've now got a trend line running down there. And then the market has run down to a third bottom, but it's a slightly higher bottom there. Now, this triple bottom, I'm not a fan of it. I don't think that's going to hold. I think that we're going to run down and break those lows. You've got a slightly higher bottom here. For a double or a triple bottom, I like to see the market break through the last low, take out all the sell orders that are down there, all the stop losses that are down there, clean those all out. And then if it can rally from there, it means that there's no selling pressure and the market is probably going up. So I think at some point, I think we're going to have a pullback from here on the monthly chart. So more upside on the monthly chart for now. And that's backed up on the weekly chart, where we've just had a higher bottom there and we're slowly working our way up there. I think there's a bit more upside. Eventually, though, whether it reaches that trend line or whether it fails, I think we're coming down and we're breaking those lows there, and the US dollar yen is going down. Look at this area here, this strong run up here out of the April low. Here it is on the daily chart. So you've got the runs up there, and you put the ranges card on, bang, 75% down there, 75% retracement. And you've got a higher bottom. Another little higher bottom there, another little higher bottom there. Now we're sitting above 62.5%. If this market can sit above the 50% milestone there, there's a good chance that we are going to have that run up that I've been talking about for about 6 weeks through here, maybe about 4 weeks. We had the overbalance up here and then a little bit of a pullback. So maybe it's the last 2 or 3 weeks, but it feels like it's been a while we've been looking at that. So US dollar yen looking like it's going up. Well, that's likely to see the Australian dollar and the pound and the euro falling against the US dollar. But that's not always the case. It doesn't always play out that way. The US dollar yen can go up and the Aussie dollar US dollar can go up as well. I've seen it go both ways. I don't see a smoking gun price cluster for the US dollar yen, but around the 150, 151 level is probably not a bad one to be watching. If and when the market gets up there, we can have a look at that as we get closer and start looking at the smaller timeframes and seeing where they're locking into. Let's look at the economic calendar now. I don't look at this to give me trades, but I do look at it because it can tell me areas where there might be high volatility in the market. Around these red folders here, the red are expected to give high impact. These are news announcements, forexfactory.com/calendar. So on Tuesday morning, Sydney time, you've got the yen monetary policy statement expected to say the same. And then in the evening, you've got retail sales data in the US. And then the next afternoon, you've got CPI for the British pound coming out. But it's really this Wednesday night where you've got US unemployment claims, and then Thursday morning at 4 a.m. where you get the Fed funds rate expected to stay the same at 4.5%. So if there's a variation on that, if they lower or even raise rates there, you're going to see some market volatility. But you've also got the economic projections and the FOMC statement. Now, what will often happen is if the interest rate changes unexpectedly, that can move the market immediately. If it doesn't, people start reading the projections and the statement, and it takes time. So there's a bit of a delay before you see a move in the market there. If nothing happens there, you'll often see at 4:30 or 5 or 10 minutes after that, during the press conference, a question gets asked, the market seems to get the answer they want, and boom, off the market goes. But the point is, between that and your 11:30 a.m. Aussie dollar employment figures, I'd say the Thursday the 19th, there's a pretty good chance that's going to give us a daily or a 2-day swing in the Australian dollar. So again, I think we're going to run down into that low. However, if we run up into a high there, well, that would be a different story there. So I'll be watching the trend very, very closely on Wednesday as we approach that potential turning area on Thursday. Then you've got some more monetary policy stuff coming out. You've got the Swiss data at 5:30 p.m., still on that Thursday the 19th, and the pound at 9 p.m. that night. And then on Friday, you've just got pound retail sales and the Bank of Japan governor speaking as well. For those who missed it, a week ago, I put up a video called A Step-by-Step Plan for GAN Traders that actually works. There are 12 steps there. One of the earliest steps is actually finding out, do you want to be a GAN trader? I mean, it sounds exciting. There's a lot of promise there. There's also a bit of controversy with GAN. Some people say he was a fraud and he never made any money from trading, which I find hard to believe given what he has in his books. But hey, maybe he was a don't practice what you preach kind of a person. But I can tell you the rules that he has and the techniques that he has still work just as well today as they did back in his day. And they're brilliant. They were ahead of his time when he was around, and they're probably still ahead of their time now. But this is a video I'd encourage everyone to watch at some point. This is based on my 20 years of experience in the GAN field, and it will show you certain things to target at certain times. A lot of people get ahead of themselves in this field. This is, I think, a really good way to build a strong foundation for your GAN trading if you want to be successful, which I know you all do. Speaking of GAN, he supposedly coded all of his best trading and forecasting secrets into the novel that he wrote called The Tunnel Through the Air. And I've created an audiobook of that because if you do want to decode the book and extract the information out of it, you will need to familiarize yourself with it, which means you're going to have to read it or listen to it plenty of times before you can begin to notice all of the repetition and things that GAN's getting at in there and start pulling apart what he might actually be talking about. That's all for this video. Again, if you're new to the channel, there's a few videos there that you might like to get started on. And if you did find value in this video, I'd really appreciate it if you could just click the like button, add a comment to the video, and subscribe to the channel to keep up to date with my latest videos. The reason that I started the channel was to put a little bit back into the GAN community. I've been studying for 20 years. I've learned a lot of things from a lot of people. And I'm very much driven by the Armenian philosopher, Gurdjieff, who said, if you help others, you will be helped. Perhaps tomorrow, perhaps in 100 years, but you will be helped. Nature must pay off the debt. It is a mathematical law, and all life is mathematics. Now, Gann never mentions Gurdjieff, but if you look at Gann's reading list, he does mention a couple of books by P.D. Ouspensky, and P.D. Ouspensky talks all about Gurdjieff. So I'm sure Gann was pointing you in that direction for a reason. Anyway, my intention with this channel is to help those who need it on the Gann journey and to spread Gann's story and Gann's techniques as well. I know that in today's society, there are a lot of good people who are struggling. Gann is not an easy road at all, and it's a multi-year road before you start to see benefits from it, but it also has the potential to turn anyone's life around. And I think that's really important to spread that message as well. So you can help doing that by clicking the like button and leaving a comment below. You can say hi, you can ask a question, you can leave some feedback, anything you like. You just type a letter and hit enter, whatever you want to do to interact there. The YouTube algorithm looks to see, are people watching this? Are they liking it? Are they commenting on it? If so, they're engaged. So the algorithm will push the video out to more people. Thank you so much for watching. I hope you found some value in the video. The Forex Form Guide goes out at 7 p.m. Sydney time every Sunday evening. So until next Sunday, I wish you all the best for the week ahead, both in your life and in your trading, and bye for now.